Hey guys, I'm going to give you the September lending update, and I have over here David Wakefield with Prime Lending, who has been doing business originating mortgages for about 25 years.
That's correct, Martha. And I think you and I have been working together since probably about 2007. So we've been working together quite a while, assisting lots of great buyers through all markets, right? Ups and downs of the real estate market. So we certainly have had some great times together. And it's an incredible time right now in the real estate and mortgage industry. And rates are very, very good. So what questions do you have, Martha?
Well, I have a few questions
Okay.
that I believe are going to benefit all our sellers and buyers. And one of the questions, David, is about, I have heard that the Fed cut rates. Is that correct?
That's correct. Yeah, it's been all over the news. You've probably seen it. I have lots of people, clients of mine that have contacted me. You may have had some of the same. When the mortgage rates are cut, when the Fed cuts the Fed funds rate, that doesn't necessarily mean that mortgage rates are cut. So oftentimes that's confused. And with a Fed cut, impacts short-term lending on things such as credit cards and home equity lines and auto loans and things like that. In fact, the impact on mortgage rates typically is actually to push the rates up a little bit in the initial times following that, because a lot of the investors out there feel the Fed is no longer so concerned about the inflation risk. So sometimes rates actually spike up a little bit right after they cut it, and then so that's exactly what happened, as a matter of fact. So the rates went up a smidge after the Fed cut the Fed funds rate. Mortgage rates actually went up.
So they didn't drop by 25%?
No. That's very often confused, and that's certainly not the case. It did not drop by 25%. And again, as I had said, I had many people call me asking the same thing, right? You just quoted me 4% on a mortgage. Is it now 3.75% with the same cost? Well, the answer is no. That was not the case. There has been some movement in the rates, but certainly that is not the case. When the Fed cuts the Fed funds rate, mortgage rates do not automatically cut.
I see. So what are the rates doing now?
Rates are looking very good now. Now rates are in a very historic low area still, right? So the rates had been extremely low. Then they started trending up for a little while, and we have seen a good little run where they've been dropping down a little bit. So we have seen rates improving lately, and I think there's a good possibility, Martha, that rates may continue to stay in a pretty similar pattern as where they are right now.
I see.
They could push up or down a little bit depending on what happens with all these economic things out there.
I see. Well, David, tell us what happened with the mortgage, or how the impact will be on a mortgage for someone if the payment is different due to the interest rates.
Sure. Well, so if rates change by about 1/4%, I mean, a lot of
Okay.
times that's a big number that people get kind of fixated on. So if we look at a rate that's, say, about 4.25%, and maybe it drops down to 3.99 or 4%, depending on the loan size, obviously is going to dictate what the impact's going to be. But you might see a difference in a payment of maybe about $30, $40, $50 a month for about a 1/4 point swing in rates.
It's very interesting. It's very good information. Well, in the middle of all this, I think it will benefit pretty much the buyers and sellers to know also what is the median price in Jacksonville Metro and in St. John's County. In Jacksonville Metro, we are talking about the median price about $265K for current listing properties, and properties that have been sold, the median is about 210. And for St. John's County is 358, and the sold median price is 310. And something really important that I would like to point, because there is a lot of people trying to invest. So if you buy in St. John's County, you can rent easily. The median is $1,800, and in Jacksonville is $1,450. And now I'm going to ask David to break a little bit these numbers for us.
Sure. Okay, so based on that, and looking at the number at say a 210 sales price basically, or a 310 sales price, because I think that's what you were saying for Duval County and St. Johns County. The payments on that will range depending on the loan type and the down payment that buyers are putting in. You might be looking at, in Duval County, maybe somewhere around maybe $1,500 or so for the actual mortgage payment by the time you put in taxes and insurance. In St. Johns County, that $300,000 range, you might be looking at $2,200 or something like that in the way of a payment. But the big thing is, as you're looking at these numbers and how they change, it's a great opportunity to be able to buy, to be able to to have that appreciating asset, and obviously you're putting down the balance right as you're making those additional payments. So you're building up, you're creating equity, and you're creating wealth basically by the use of real estate. So there's some great opportunities to take advantage there. As far as things are concerned, though, I do feel it's very important to point out right now the way that rates are going. I have had people that have kind of been, sitting on the fence, trying to decide, do they want to do something now? Do they wait? What's the call to make on that? And as Martha had pointed out, and we talked about before, if the rates move up, by about 0.25%. You might see in Duval County about 0.25% is about $32 a month roughly on a 210 sales price, or if it goes up 0.5%, that's $64. And in St. Johns County, that 0.25% is about $47 a month, or about 94. So basically $100 more if you wait, and if rates actually move against us. Rates, I say, tend to shoot up like they got a rocket strapped on their back. When they go up fast, and people are wondering what just happened. When they come down, it's like they got a parachute. They slowly float down, and they come down softly and slow. So when rates are going to go up, they go up, and people are often bewildered and wondering what just happened. And they were just quoted a rate at 3.99 or 3.75 or something, and now they're 4.25 or 4.5%. And that $100 could be a monumental shift in their affordability and being able to purchase.
Definitely. $100 could be a problem for many buyers.
Sure.
Yes, definitely. Well, this is a great information. And tell me a little bit about what happened if the interest rates goes up in 1/4 or half a point, let's say over 10 years. What could happen?
Sure. Well, it's a great thing, and I think when you and I talked before, we've obviously had many conversations over the years about our clients, and I know that people a lot of times are moving after about 7 years, and I think you told me recently they're staying about 10. Is that correct?
About, yes.
Yeah, so roughly about 10 years. So if you're looking at a 10-year mark, over a 10-year stretch, if you're looking at the total interest paid on a 10-year number, that might be on a 310 scenario. That's going to be about $111,000 at, say, a 3.99% rate. Now, if that pushes up to, say, about a 4.25, that puts it to about 119. If it pushes up to about 4.5, that puts it around 125, 126,000. So, in theory, if the rates move up by 0.5% over that 10-year stretch, they'd be in that house. If we take the 111 roughly at 3.99 to about 125, 126, you're looking at about $15,000 more that they'd pay in interest over that 10-year stretch. If they delay in just that little 0.5 point movement in rates. $100 a month, $15,000 approximately over that 10-year stretch, so they'd be in that house. That's a pretty substantial difference for a lot of people.
It is. It's a big number.
Sure.
It's a huge number. So that makes sense. I will say that people should make a move right now instead of waiting and taking the risk to see if the interest rates goes 1/4 point or 0.5 point, which is significant.
Yeah, it does. It really makes a lot of sense to pull the trigger and go ahead and purchase now if you're able to, and in locking in something that we have available for our clients too. Because a lot of times when people are considering locking in, they're wondering, is it a good time to lock? Do I pull the trigger? Or do I wait and float the rate to see if it's going to get better? We offer a free float down on most of our loan products. So what that means is if we lock it in for simple numbers at 4.375, and if the rates get better prior to closing, within 20 days of closing, we can drop it by as much as 3/8 of a point at no cost. So that way, that eliminates their concern and the risk, no cost. So you can lock it in at 4.375 or 3.875 if the rates actually get substantially better. You in theory can drop down to 3.5 at no cost if the rates continue to fall during the process that we're working on their loan and getting them approved and closed. You got a 20-day window prior to closing. It's a great opportunity, and if rates do start to fall, it's the best of both worlds. You're locking in, you're protected, you don't have to worry about it. And if the rates get better, you get the benefit of that better rate prior to closing.
Excellent. Well, guys, I think this is a really good information for you to make a decision if you want to take the chance to buy now or take the chance to know what's going to happen later on. So if you have any questions, you can call us at the number on the bottom. This is Martha Gardner Group with Future Home Realty. And our number is 904-235-9304, or call David.
That's right, David Wakefield. You can always get me at davidwakefield.com, or my phone number directly at the office is 904-394-1398.